Here we have the 4-hour price chart for Marathon Digital Holdings Incorporated, stock ticker MARA. So as we can see here, the stock is still trading under a fair amount of selling pressure, and this has broken some fairly significant support zones in the process. So anybody that's currently watching this stock will need to watch the remainder of the video to see the ultimate price zones that I am watching here so that we can start to structure some profitable trades for this stock going forward. The first level that I want to look at comes in at roughly 1880. As we can see here, this is a major support zone that was tested on 3 separate occasions. Essentially, we can really define this as a triple bottom support zone. However, in this most recent move lower, we have started to break that level, and there also has been a fair amount of follow through since then. So this was a very critical price break, and it came during this would be roughly the August 1 trading session is where we really saw this price action start to move lower. So this is significant because we have now convincingly moved below the exponential moving average cluster. As we can see here, if we drill in a bit, we can see that share prices have moved below all 4 of its major exponential moving averages on the 4-hour price chart. So essentially, this does tell us that momentum is starting to head in the negative direction. But at the same time, we do have to look at the indicator reading here, which is starting to move out of oversold territory. So what does this tell us? Essentially, this tells us that even though we're starting to see these major moves lower following a very significant price break to the downside, we can see that the stock has started to reach a point of exhaustion. This current trend level and trend action is reaching depths at which share prices are unlikely to continue falling lower. So as things currently stand, what we could be seeing here is a bit of a bottom for the stock. Of course, this is going to depend largely on the overall cryptocurrency market and how things are developing in that space. And I do suggest that people consider taking a look at my trading room, because I do have some fairly specific small cap stocks that can be found in addition to Marathon Digital Holdings, which are very excellent trading plays with much more upside potential, let's say that, relative to Marathon. However, I do understand that a lot of people are currently long this stock, so we do want to make more of a price analysis here going forward. So as we can see, the current price lows come in at 1367. This will now be the critical level to the downside, and it's mostly important because the prior support zone that we saw on a long-term basis, we can drill out on the price chart here a bit more, and we can see that the ultimate price lows came during the middle of April, coming in at roughly $14.18. So this new movement lower here has forced share prices below that level. Overall, this is a very critical price break because it does suggest that prior support zones at 1418 are no longer valid. So this does call into question some major issues here for bullish shareholders, because the real question here is whether or not we will actually be able to find a sustainable bottom for this stock. So what would we need to see in order for that to happen? So currently, the main issue that we would need to see is for this 1367 price zone to remain intact. If we see a break below there, we could be in store for some much further prices lower. However, if we start to see some upside movement, the positive scenario would be that we could break above this 1650 level. Currently, where this marks is the 20-period exponential moving average on the 4-hour price chart. As we can see here, these moving averages started to deviate from themselves. In other words, what we're starting to see is much more distance that is starting to develop between these exponential moving averages. That's significant because it does suggest that there are real questions that need to be raised about the potential trend activity that is likely to unfold going forward. So if we do see a break above this 20-period exponential moving average with share prices, the next upside test would have to be targeting the 1825 zone, because this is roughly where the 50-period exponential moving average currently rests. The issue here, moving into this exponential moving average cluster, does come from the fact that it can be very difficult for share prices to move out of the exponential moving average cluster once they move into it. It's sort of like a vacuum chamber. It's sort of, you can see prices sort of bounce back and forth between these levels. These prices can start to ping pong between these exponential moving averages, and it can be very difficult to get out of this trading range. So ultimately what that means is that it can be very difficult for trends to start to develop in either direction once you start to move into these areas here. So the upside here does need to break into the moving average cluster first. I don't want to discourage people from viewing that as a potential outcome here, because moving into the moving average cluster is better than trading below the exponential moving average cluster, because this clearly defines activity in the downside momentum direction. So if we are able to break above this 20 period EMA, we would then be trading inside of the exponential moving average cluster. And then this does offer some support for the stock, because now we will start to see probably more of a sideways consolidation phase first, before the stock actually makes a real decisive move in either direction. We could see prices move down lower once again, but at the very least, this would halt the current downside trading momentum. So if we do break above this 20 period EMA, the next upside target then becomes roughly 1820, 1830, and then the real level to the top side that bullish traders should be watching comes in at 1940. The reason that I point to this level is because this is currently the 200 period exponential moving average on the 4-hour price chart. And currently what we're seeing here is the 100 period EMA, which is the purple line. We're currently seeing that area break below the 200 period EMA. That's a bearish signal. So ultimately, we do need to see prices break above 1940, because these two moving averages are still relatively close together. The same is not true for the 50 period EMA and the 20 period EMA. So there's much more distance here. And if we are able to break above the 20 period EMA, this test of the 50 should be relatively easy. However, once we start to move upward from there, things are going to become more difficult, because now you have two moving averages to deal with. And one of those moving averages, the shorter term moving average, is crossing below the longer term EMA. So the real level to watch to the top side is 1940. I think that if we do break above this area, we could start to take some of this pressure off of the downside. And given the fact that we recently broke below this 1418 level, this is going to be very critical for bullish traders going forward. If we do not see this 1367 level hold, there could be a massive move lower in the share price, as in we could be looking at a test of roughly the $10 zone, because this is the next psychological level to the downside. So here's the current market analysis for Marathon Digital Holdings Incorporated, stock ticker MARA. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.